I turned $1,000 into $10,000 in just 8 months, not with some secret indicator or Wall Street insider tip. No fancy algorithms. Just my brain, a laptop, and daily psychology checks that most traders ignore. You're probably thinking, yeah, right, that takes big money or genius strategies. Wrong. 90% of retail traders lose everything. Not because they're broke or dumb, but because their emotions hijack every trade. FOMO. Revenge sizing up after a loss, staring at charts for hours, feeling busy while your account bleeds. I know, because I was you. Lost my job in 2018, scraped together $1,000 and blew half in weeks chasing sure things. But I've traded full-time 7 years now, coached over 200 beginners to consistent profits, and I'll show you the exact steps. Ruthless 1% risk rules, mindset drills that rewire your impulses, turning panic into boring wins. Sound too simple? Here's the thing. Simplicity crushes complexity when your head's in the game. But how exactly did I do it without blowing up again? Let's break down the traps you're falling into right now. These misconceptions kill dreams daily. Think about Alex, that struggling beginner just like you. He scraped together $5,000 from his side hustle, devoured YouTube signals promising 100% wins, and dumped it all into guaranteed breakouts. 3 weeks later, zero. Not because the market was rigged against him, because his brain screamed one more trade after the first loss, turning a dip into a death spiral. You're living this right now, aren't you? Staring at your broker app, heart racing after that FOMO entry goes red. Broker stats back it up. Over 90% of resale Forex and CFD traders lose money, per SEC reports and EU regulators like ISMA. It's not bad luck. It's biology and bad habits wired into every one of us. The stakes, way bigger than cash. Your torching time you can't get back. Nights scrolling charts instead of living. Confidence crumbles. Self-doubt creeps into your job, relationships. I've seen traders bet life savings on the next big move, waking up to margin calls that shatter families. One bad month, and you're out, questioning if trading's even possible for regular folks like us. Here's the biggest lie you tell yourself. I just need better indicators, algorithms, or insider tips, or big wins demand big risks. Go all in for home runs. Wrong. Dead wrong. Van Tharp's research in Trade Your Way to Financial Freedom shows 80% of trading success is psychology, not setups. Indicators are toys if your emotions pull the trigger. Big risks? They're casino bets where the house, your impulses, always wins. It's like hunting with a machine gun instead of a sniper rifle. Spray and pray feels exciting, but you miss every shot and run out of ammo. Patience and precision, boring but deadly effective. You're not alone in this. Hell. Traders on Reddit and X rant daily. Tilted after 3 losses. Overtraded to recover. FOMO killed my account again. But here's the hope. It's fixable. Not with more signals, but mastering your mind. I'll show you the one rule that protected my $1,000 from turning to zero, even when emotions raged. But first, the trap you're probably in right now. That trap? It's thinking one big win will save you. You load up, risk 10%, 20% of your account on the perfect setup. Heart races. It hits, euphoria, but then the next one misses. And you're back to square one or worse. Sound familiar? That's how most traders nuke their accounts. Not bad setups, reckless sizing. Let me hit you with the rule that changed everything for me and turned my $1,000 into $10,000 without a single sleepless night. It's simple, brutal, non-negotiable. Never risk more than 1% of your total capital on any single trade. on a $1,000 account like mine was. That's a maximum $10 loss per trade. Yeah, 10 bucks. Feels tiny, right? Counterintuitive as hell. But hear me out. Here's how you size it. Say you're eyeing a stock at $50 entry, stop loss at $49. That's a $1 risk per share. Your max risk is $10, so you buy 10 shares. Formula's dead easy. Risk amount divided by entry minus stop loss. $10 divided by $1 equals 10 shares. Boom. No math degree needed. Why does this crush it? Math doesn't lie. With 1% risk, you can survive 100 straight losers before you're broke. 100. Think about your worst streak. 3, 4 losses? Pathetic compared to that. Even at a 40% win rate, your account compounds safely. Van Tharp crunched this and trade your way to financial freedom. Blow up risk to 2% and a 10 loss streak halves your capital. At 5%, 5 bad trades and you're toast. Contrast that with Mike, a crypto trader I followed on X. Started with 20 kilo. High conviction only, he posted. Risked 10% per trade. 2K lot pops, first week, 3 wins, portfolio up 40%. Hero status. Then volatility hit. 4 losers in a row. Down 8K loss, panics doubles down, gone in days. Blew the whole thing. Real story. Check his thread from last year. Mike's not dumb. He's human. Big risks amplify your brain's worst impulses. You're spraying machine gun fire, hoping to hit something. But pro snipe, 1% feels boring. Passive even. It's not. It's your survival foundation. Protects you from yourself when FOMO screams, go bigger. I started here with my 1K losses. First month, 5 small wins, 3 tiny losses. Up 8%. No drama. Compounded monthly, that's how you hit 10K lawler in under 2 years without hero trades. This rule saved my ass early, but alone, it crumbles if your head's not right. Emotions still sneak in, pushing you to cheat it. That's why you need daily psychology checks to tame that inner demon. Stick around. I'll show you exactly how. Those daily psychology checks, they're your lifeline. Simple, quick rituals that catch your brain before it drags you into the fire. Without them, even that 1% risk rule I just hammered home, useless. Your emotions will override it every time. Start your trading day with a 5-minute morning journal. No excuses. Grab a notebook or app. Rate your fear on a scale of 1 to 10. Greed 2. Then jot down biases lurking. FOMO from that X post last night. Revenge urge after yesterday's loss. Be brutally honest. Sounds basic? Here's the thing. Most traders skip it because it feels unproductive. But Mark Douglas nails it in Trading in the Zone. Your psychology dictates your results, not the market. He interviewed hundreds of pros. The edge? They audited their heads first every day. Now, layer on the rule of 3. Check yourself 3 times per trade. Before entry, is this my setup or FOMO whispering? Heart racing? Walk away. During the trade, every hour, pause. Still following the rules or moving that stop? Emotions creep in quiet. Post-exit. Win or lose, what bias showed up? Did greed make you hold too long? Write it down. Your brain lies. Checks expose it. Your brain lies. Checks expose it. Repeat that till it sticks. I learned this the hard way in month 2 of my $1 challenge. Up 12% overall, feeling cocky. Skipped my morning journal. Too busy scanning charts. First trade, perfect setup, but greed spiked. Risked 2% instead of 1%. Lost. Second loss. Heart pounding. Revenge hit like a truck. Third trade. Chased a breakout. Blew another 1%. Down 3% in hours. Stared at the screen. Isolated. Questioning everything. Sound familiar? That's your amygdala hijacking the wheel. Prefrontal cortex offline. We all feel it. You're not weak, you're wired that way. But here's where control snaps back. Next day, I forced the routine. Journaled. Rule of 3 on every setup. Tiny sizes only. No revenge. Recovered that 3% in a week with 4 small wins. Tension gone. Clarity returned. Satisfaction? Huge. You can have that too. These checks build the discipline pros swear by. They're your seatbelt, keeping you safe on the wild ride. But consistency? That's the engine driving you forward. Coming up next. Systems work when you treat them like a machine, not a casino. You're not hunting lions here. You're farming crops. Plant the same seeds daily. Harvest when ready. No heroics, just consistency. Picture your day. Wake up, coffee in hand. Spend 30 minutes scanning. No more. Eyes on your 3 to 5 setups only. The ones you've back-tested 100 times. That's it. Heart flutters at a breakout? Ignore it. Stick to the list. Risk 1% max per trade. That's your golden rule. Position size tiny. Why? Your brain craves action. Big sizes feed the dopamine rush. Tiny ones starve it, forcing discipline. Think about it. You're aiming for 45% win rate. Sounds meh, right? But pair it with 1.5 to 1 reward to risk. Math magic happens. Win 45 out of 100 trades. Each win nets 1.5 R. Losses cost 1 R. Expectancy? Positive 0.15 R per trade. Over 100 trades, 15 R profit. On your 1Q account, risking 1%, that's $10 per trade. Compound it monthly. Boring? Yes. Bank breaking? No for the patient. This compounded my 1Q account challenge. Month 3. Stuck to the routine. 4 trades a week. No overtrading. Up 8%. But one trader's story proves it scales huge. Stick around. You're thinking, what about market crashes? Black swans? Fair. Diversify time frames. Daily for trends. 4 hour for entries. 15 minutes for precision. No single time frame owns you. Spreads the risk. Protects your edge. Back in the 80s, Richard Dennis proved it. Trained the turtle traders. Total rookies. Gave them rules. Trend follow. Pyramid winners. Cut losses fast. No discretion. One started with 1Q couch equivalent. Turned it into millions. Not psych geniuses, just rule robots. Schwager interviewed them in Market Wizards. Quote, "We were successful because we followed the system religiously. No emotions. Pure process. You can replicate that. Your routine becomes armor. Scan, check rules, enter, exit, journal, repeat. Hope builds as streaks even out. Losses sting less. Wins feel earned, not lucky. Satisfaction hits when you glance at the account. Steady climb, no drama. I did it with my 1Q account. You will too if you build the system now. But blowups lurk for the inconsistent. Systems work, but let's meet the consistent pro who nailed it without one scare. Meet Sarah. She's the consistent pro I mentioned. Coached her last year. Started with $2,000. Struggling beginner like you. FOMO kills. Revenge trades after 3 losses. Staring at screens till 2 a.m. Sound familiar? Her account bled 15% in week 1. Heart pounding. Ready to quit. But she flipped it. One rule, 1% risk max. Checklist every trade. No exceptions. Month 1, 4 wins, 3 losses. Up 6% to $2,120. Boring? Hell yes, but steady. You see, you're thinking markets are random? Chaos. No edge. Wrong. Edges exist. Site compounds them. Sarah's win rate? 52%. Tiny 1 to 1.5 R. Expectancy 0.26 R per trade. Over 200 trades? 52 R profit. That's $140 on her start. Compounded? $25 by year end. No hero trades, just process. Now, my $1 billion challenge. Month 1, 450. 5 wins on daily pullbacks. Risk $10 each. Felt like nothing, but I stuck. Month 3, $1,000 and $50. 5 wins on daily pullbacks. Risk $10 each. Felt like nothing, but I stuck. Month 3, $1,000, 4 clean setups. Nailed them. Hit $10K. You're imagining fireworks. Nope. Quiet coffee sip, check journal, smile. But here's my vulnerability. Month 5, 20% drawdown. $1,000 peak to $1,000 puig to $1,000 and easy $1 screaming. Quit now. Family asking, why waste time? Isolation crushed me. Thought, I'm the idiot. Markets hate me. Almost bailed, like you after your 3rd loss. Heart racing, fingers itching for double size. What saved me? 1 breath. Walked away. Reviewed journal, not the market. Me. Skip checklist once, boom. Back to rules. Drawdown ended. Win stacked. Tension? Brutal. But hope sparked. Then satisfaction. Watching that curve climb. No drama. Pure power. Sarah, same. Near $1,800, low emailed me panicked. Can't do this. I said, journal it. Tiny size, 50 reps, she did. Breakthrough, you can too. This isn't luck. It's you beating your brain. Think that's all? Markets random? Nah. But losses? They're your secret weapon. Coming up, why they teach more than any win ever could. Stick around. This flips everything. You think losses are the enemy. They're not. They're your secret weapon. The best teacher you ever had. Sound crazy. Think about it. Every blow-up trader ignores them, chases wins, but winners. They celebrate managed losses. Why? Because a loss that follows your rules proves your discipline is ironclad. It's not failure. It's evidence. You're beating your brain. Take my one goose more challenge in 2022. Bear market hell. NASDAQ cratered 30%. You remember crypto winter, tech bloodbath. Most retail accounts vaporized. FOMO, shorts, revenge longs, gone. But mine survived. How? Tiny 1% risks. $10 per trade. Hit 5 losers in a row on pullback fades. Heart pounding. Amygdala firing like a jackhammer. But I didn't move stops. Didn't double down. Journaled each one. Setup valid. Risk honored. Next, drawdown 15%. Peaked at $1,150 bottom dollars. Brutal, but I stuck. By year end, up 40%. While 90% on Reddit forums blew up, posting trading's rigged. Here's the counterintuitive truth. No hero trades. That 1% rule forces patience. You can't overtrade. Can't chase dopamine hits. Ed Sekoda.